Hi everyone, welcome back to my channel. My name is Anita. So today I'm here with the banking terms which are being frequently asked during the time of interview. Our first term is repo rate. The interest rate that the RBI charges when commercial banks borrow money from it is called the repo rate. So in simple terms, when bank borrow money from the RBI, or you can say they take loan from the RBI, and RBI charges some interest rate on that, and that rate is known as a repo rate. So what is the current repo rate? So the current repo rate is 4%. And here I would like to mention a very important point that before going to the interviews, please check the present rate of that day, because this is today's current rate. And before going to the interview, you need to check the rate of that particular day. So now here the question comes, what happen if the repo rate increases? So if the repo rate increases, it means banks are getting funds from the RBI at a higher cost, and this in return will mean that banks will also lend to others at a higher cost. So that's a simple even if you understand layman language also, then it's a very simple funda. Let's talk about a normal shopkeeper. If a shopkeeper buys something from the market at a higher cost, then definitely he will not going to sell the same product to his customers at a lower end. So the same concept follow here as well, that the bank takes loan from the RBI at a higher cost, and because of that, the lending rate is also high to the customers. Now, repo rate is used by the central bank to control the money supply in the market. In turn, this helps in controlling inflation and helps regulate the economy. So they can ask you that why the repo rate is being used. So the simple answer is to control the money supply in the market, and it also helps in controlling inflation and helps regulate the economy. Now, our next term is reverse repo rate. So what is reverse repo rate? The interest rate that the RBI pays commercial banks when they park their excess cash with the central bank is called the reverse repo rate. So in repo rate, the bank was charging the interest rate for giving the loans. Here, RBI gives the interest rate to the banks when they park their excess cash with the central bank. So this is called a reverse repo rate. Now, current reverse repo rate is 3.35%. Now, what happens if the reverse repo rate increases? So reverse repo rate is often used in times of high levels of inflation in the economy. When such conditions prevail, the central bank increases the reverse repo rate, and this prompts banks to park more funds with the RBI to earn high returns on their funds. As a result, banks have a lesser funds to extend as loans and borrowings to consumers, and the liquidity in the system reduces. So now, what is the meaning of liquidity? In simple terms, if you understand, the liquidity is the easily availability of the cash. That is the meaning of the liquidity. So it also helps to control the supply of money, and reverse repo rate basically helps you to control the supply of money in the market. So these are the few important points that you need to understand, that what is repo rate, what is the current repo rate going on, and why the repo rate is being used, and what is the purpose of repo rate, what and why the government is using, for what purpose the government is using the repo rate. Same with the reverse repo, you understand what is the reverse repo rate, what is the current reverse rate is going on, and why it is being used. So let's move ahead. So what is bank rate? The rate at which the banks borrows money from the RBI without any sale of securities is called the bank rate. Unlike repo rate, there is no sale of security in bank's rate. Such money is borrowed by banks comparatively for a longer period of time. So how is bank rate different from the repo rate? In case of repo rate, when bank borrows loan from the RBI, bank need to give some collateral in terms of government securities, bonds, but this is not the case with the bank rate. Here, the bank is not giving any kind of government securities, or bond is not keeping any kind of securities and bonds with the RBI. RBI is simply charging the interest rate from the bank for giving the loan. So now the current rate is 4.25%, and as compared to repo rate, the loan period is comparatively longer in bank rate. Now, what is marginal standing facility? Margin standing facility is a very short-term borrowing facility available to the scheduled commercial banks, and MSF rate is the rate at which these banks can borrow funds overnight from RBI against government securities. Banks can use this facility only in case of severe cash shortage and acute shortage of the liquidity. When we make the use of this margin standing facility only in the case of acute shortage of cash, and this is only available for overnight. For overnight, that is only for one night. Okay, and in this case also, bank can borrow funds overnight from RBI against the government securities, not without any securities. They need to give some securities, and then only the RBI will going to give them a loan. And the current MSF rate is 4.25%. Now, next is cash reserve ratio. Cash reserve ratio. In simple terms, you can say that the banks are required to give a certain percentage of cash which they have collected from the customer to RBI, and after keeping that cash, whatever the money left with the bank, with that money they can give for the lending purpose, or they can invest it somewhere. This percentage is known as cash reserve ratio. CR is determined by the RBI to maintain a proper liquidity in the economy. This is the purpose of CRR, and the reserves and this reserve is maintained with the RBI. So I hope till here you are clear with the terms. Now let's move ahead, and here I have given a brief description about what is cash reserve ratio, so that you will get a clear idea about what the cash reserve ratio is. So after we deposit the money in our account with the bank uses that amount to lend it to others, for example in the form of housing loans, in the form of personal loans, or to invest somewhere in order to earn money on the deposited amount. As per the regulations, bank cannot use the whole amount deposited with them for this purpose, because whenever the customer can come and ask for the money, so how will they fulfill the customer's requirement? So banks are required to maintain a certain percentage of the deposits as cash, and can use only the remaining amount for the lending and the investment purpose. So this percentage is known as the cash reserve ratio. Now, what is statutory liquidity ratio? The ratio of deposit that banks need to maintain in the form of liquid assets with them. Now, what is liquid assets? Liquid asset is an asset that can easily be converted into cash in a short amount of time, so that whenever the customer in need of the money, and whenever the customer comes for the money, and so that the bank can easily convert their liquid asset into a money in a very short span of time. Now, what is the purpose of it? To handle a sudden increase in demand of money from the depositors. This reserve is maintained with the respective banks only. This reserve is not maintained with the RBI. So let's move ahead. Yeah. So what is base rate? Our next term is base rate. Base rate is the minimum rate set by the RBI below which banks are not permitted to lend to their customers, except for some cases as allowed by RBI. This base rate is being set up by RBI, and below this rate, bank cannot give loans to anyone, except the three exceptions which I have mentioned here. Loans to banks' own employees, including retired employees, loans to bank depositors against their own deposits, and DRI advances, that is a differential rate of interest. DRI scheme is also known as DIR. It was launched in the year 1972 to provide credit access to low income groups, and the loan scheme enabled banks to lend to a weaker section of the society at a concessional interest rate. Our next term is a difference between NEFT and RTGS. So NEFT is an abbreviation for National Electronic Fund Transfer. The NEFT is a nationwide payment system facilitating one-to-one fund transfer. Owned and operated by the Reserve Bank of India, bank clear funds transferred through NEFT on a half-hour basis, which means the receiver will get the funds after half an hour from the time you initiated the transaction. So basically, the NEFT earlier was settled in the batch processes. There were batches, and then they would run the batches, and that's why it was earlier taking about a day. But now the now time has been reduced to 2 hours. Once the bank has initiated the payment, the beneficiary will receive the payment within the span of 2 hours. Now, what is the fund transfer limit in this? No, there is no limit imposed by the RBI for fund transfer through NEFT system. However, banks may place amount limits based on their own risk perception with the approval of its board. The earlier this NEFT facility was not available 24/7, and on the bank holidays earlier there was some fixed time for this for taking this NEFT facilities. Now after this pandemic, they have make this service a 24/7 into 365 days service, so you can now transfer money through using NEFT at any point of time. So next is RTGS, that is a real-time gross settlement. RTGS is an abbreviation for real-time gross settlement. RTGS can be defined as specialist funds transfer system to transfer the money from one bank to another on continuous, real-time and gross settlement basis. It allows the individuals as well as the companies and the firms to transfer funds from one bank to another. So in case of RTGS, this is more like a real-time transfer. Now they have a capping. Now what is the fund transfer limit in RTGS case? Minimum amount is 2 lakh with no upper or maximum ceiling. So now the fund transfer time, as I mentioned, is under normal circumstances, the beneficiary branches are expected to receive the funds in real time as soon as the funds are transferred by the remitting bank. The beneficiary bank must credit the beneficiary's account within 30 minutes of receiving the funds transfer message. This system is also available now 24 into 7 to 365 basis. Now the next term is IMPS, is an abbreviation for immediate payment service. Now what is IMPS? IMPS provides robust and real-time fund transfer which offers an instant 24 into 7 interbank electronic fund transfer service that could be accessed on multiple channels like mobile, internet, ATM, SMS. IMPS is an emphatic service which allows transferring of funds instantly within the banking across India, which is not only safe but also economical throughout the year, including Sundays and any bank. Now, while there is no cap on the minimum transfer amount, the maximum amount you can transfer per day via the immediate payment service is rupees 5 lakh. Launched by NPCI, National Payments Corporation of India. Next is UPI, that is a Unified Payments Interface. Unified Payment Interface is a system that powers multiple bank accounts into a single mobile application of any participating bank, merging several banking features, seamless fund routing, and merchant payments at on place. UPI system instant fund transfer between two banks accounts on the mobile platform. As many of us must be using this service, UPI, in our Paytms, in our Google Pay, in our phone pay. So this is such a time saver and this is such a lifesaver. I can say that you can make the payment instantly anywhere. Upper limit is fixed, minimum limit is not fixed, upper limit is not more than 2 lakhs in a day. So topics I want you to study, these are the topics which I'll be covering in my next video. But before that, I want you to have a glance on these topics. Just search a little bit that what this topic is. Types of accounts, many of you must be aware. Priority sector lending, I think very few of us is aware about it. When I was preparing for it, I was not aware of any such kind of term, priority sector lending. So when I have started preparation for this banking awareness part, then I came to know about this particular term. Then KYC, know your customer, NPA, non-performing assets. These were the topics, and some more topics I'm going to cover in my next video. I hope these terms will help you in your interview preparation, and I'll be taking some more sessions on this topic so that all the important topics get covered before the interview. And so that's all for today. I hope you like my content. Then please subscribe to my channel, like and share with your friends. So thank you for watching.